What's going on, guys, and welcome back to the channel. In this video I'm going to be showing you the best time frame to trade Forex. So my name is Pep and I'm here to make you a better trader using simple technical analysis techniques. If you can do me a massive favour, hit the subscribe button, comment on the video. This will really help the channel reach more people. So if you've come to this video thinking that I'm going to be showing you the best and most profitable time frame to trade Forex, then unfortunately you're going to be disappointed.
I am very disappointed!
When trading Forex, there is no, golden time frame to trade. The time frame you trade on depends on your goals, objectives, your style of trading. So if somebody out there is telling you, right, you can make the most amount of money trading the 1 hour time frame, this is just not true.
Tell the truth.
The time frame you actually place your trades on can be based on many things, and in this video we're going to explore a few of them. So when thinking about the time frames you want to trade on the Forex pairs on your watch list, there's two things you need to consider. The first one is what time frame are you going to be doing your analysis on? And the second, what time frame are you going to actually place your orders? Now this goes for placing your order, placing your stop loss, and where to place your take profit. Now to do this, you really need to understand the style of trader you want to be. You also need to consider how much chart time you can get in every single day. For example, if you're working a full-time job, then a scalping strategy is probably not going to best fit you. If you have a full-time job, most people can get in around 30 to 1 hour a day looking at the charts. So if this is the case, then like I've said, scalping isn't going to work. You need to start looking at the higher time frames, looking at position size and looking at swing trading strategies. Now I personally split my trading into 3 different time frames. So the first is long-term trading, the second is short-term swing trading, and the third is intraday trading. So if you're a long-term trader, so this is somebody, like I said, who doesn't have much time to look at the charts every day, then you want to be looking at the daily chart, the weekly chart, and maybe possibly the monthly time frame as well. So one of the advantages of long-term trading is, like I said, you don't have to be stuck in front of the charts all day. You also don't need to worry too much about the spreads. Obviously you need to be careful when the New York closes, but apart from that, spreads aren't going to affect your entries too much. Now one of the downsides to long-term trading is you really need to be a patient individual. The setups you're looking at could take days to weeks to form. So you really need to master sitting on your hands and waiting for the correct setups. So if you're looking at short-term swing trading, then you could possibly do your analysis on the daily chart, then drop down the time frame, so like the 8 hour, 6 hour, 4 hour, or even the 1 hour time frame. Now the advantage of this style of trading is you're going to find a lot more opportunities than long-term trading. Now one of the disadvantages is you need to consider the commissions are involved in short-term trading. So this can be things like the spread and also the swap rates. So let's take a look at intraday trading. So, this could also be classed as scalping depending on how low you want to go on the time frame. Now this is high action trading. You'll be placing trades on the 1 minute time frame all the way up to the hourly time frame. Now this is very fast paced trading. You need to have dedicated time in front of the charts. And most importantly, you need to be consistent on when you're looking at the chart. There's no point looking at the charts at 9 PM one day, then the next day looking at the charts at 10 AM the next day. And consistency, to be honest, is so important across any trading strategy you look to employ. So before you pick the time frame you want to trade or the type of styling you want to trade, you really need to understand your own personal objectives and essentially how much chart time you can get in the day. Now, like I said, consistency is key. Whatever one you choose, you need to make sure you're consistent day in, day out. So let me jump into the charts quickly, and I'm going to show you an example of the 3 different time frames and how we can use them. Okay, so first let's start looking at the long-term trader. So like I said, as a long-term trader, you're going to be flicking between the monthly, the weekly, and the daily chart. Now, why is this long-term trading? So if, say, for example, our trading time frame, so this is where our executions are going to be, if we look here, let's just say hypothetically, we're going to wait for price to retrace back to this support level before we start looking at long positions. So this move could take, anywhere between if it does happen, it could take anywhere between 1 to 2-3 weeks, whatever it may be. So this is why you just need to sit on your hands and just wait for the trades to play out. You don't want to be forcing trades. This is why you need to be a very patient individual when long-term trading. So for example, if we were looking at this move here, back down to this level here, this took, so we got 1, 2, 3, 4, 5, 6, possibly 7 days until you were able to enter this trade based on your, trading strategy and entry criteria. Now, vice versa, as a long-term trader, you might say to yourself, you're a counter trend trader, you're looking at this resistance level. So then again, we're waiting for price to reach this level. This is not going to happen overnight. This is why you just need to be patient, wait for the trades to play out, wait for price to go where you've decided to take your entries or stop loss, take profits, whatever it may be. But essentially all you're doing is just being patient. In this scenario here, for example, let's just say we're looking at this level here in the past. This move here, this would have taken 21 days in total. So again, patience is key when long-term trading. So let's take a look at, short-term, mid to short-term trading. So with this type of trading, you can still do your analysis on the daily time frame. And then what you can then start to do is drop down the time frames up here. So, typically you'll switch between the 1 hour all the way up to the 12 hour possibly. So again, you still may have to be patient for the trades to, get to a position, your key areas of value, your support and resistance zones. But when you come down to actually executing the trade, you can then start jumping down to the hourly time frame. Now, another strategy you could employ is, let's say we're predicting price will look to move to this resistance level. Well, again, short to mid-term trading, you can then maybe drop down to the hourly time frame and you can start to look for positions, to enter a position to look for a move to the upside. So for example, in this scenario, if we look here, we're clearly trending upwards on the hourly time frame. So actually where price currently is at the moment could be a great opportunity. We have support here. So previous resistance here has now turned support. So this could be a great long opportunity on the pound against the dollar. Now again, on short to mid-term trading, you ideally don't want to drop below the 1 hour time frame to look for your entries. Again, be patient, look for the correct setups here, whether that's some sort of pattern, a double bottom, a pin bar, a bullish engulfing pattern, for example. All these will help you enter the trade, and then, it's really down to your risk management on how you want to, look for this possible move to the upside. One strategy, again, take profit level 1 at this level, stop loss to break even, and then look to ride it up. Now again, if you did enter a position here, it could take over a day for price to move up to this level here. Again, it's not going to happen, within an instant. This isn't scalping. So, we could see price action like this. This could form over, a day, 1 to 2 days. It really depends on, volatilities at the time of placing the trade. So let me show you an example of intraday trading. So here again, we could possibly do our analysis on the 1 hour time frame, but when it comes to executing trades, you're dropping down to the 5-minute chart. So an intraday trade, for example, let's just look at this move here. Again, we've gone from the 1 hour where we're trending upwards, moving down to the 5-minute chart where we're actually trending downwards. So it really depends if you're doing a top-down analysis, but let's say you're not, you're just trading the time frame you're looking at. Here we'd probably look at this move, we have a lower low, a lower high, a lower low, again a lower high, a lower low, and then, what move we're going to be looking for, a pullback into previous structure to this level here. So again, on the 5-minute time frame, again, you'd probably, again, depending on your strategy, look at this zone here. wait for price to enter into this zone, then look for candlestick patterns here. Again, top-down analysis, you could do your analysis on the 5-minute chart, and then as price heads into this zone here, you could then drop down to the 1-minute time frame. And again, all you're doing is being patient, waiting for price to come into this area, and then look for some kind of entry technique in here. Again, maybe a double top, lower low close candle, for example, a bearish engulfing pattern, whatever it may be. Another example, for example, you could see this, price come up here. We put in a double top, for example. Or, for example, we could, see this and then you catch the flag. It really depends on your trading strategy. These are just some wild examples that, could happen. So I hope this video has helped you understand the importance of timeframes and which time frame to trade based on your goals and objectives. If you have any questions, please hit me up in the comments section and I'll happily help. Cheers, guys.